A tale of two cities. Well, really a tale of all 50 states and the District of Columbia, illustrated by comparing tax systems in Texas and New Jersey. As you may know, most state and local tax systems are regressive. This means poor people pay a higher effective tax rate than the very rich. One reason for this is that states rely heavily on sales and excise taxes. These taxes are highly regressive and capture a greater share of income from low-income people than from the rich. But it doesn't have to be this way. A look at tax systems in New Jersey and Texas reveals how our elected officials' policy choices can make a difference. Before taxes, income disparity in Texas and New Jersey is similar. A top 1%er in Texas has an average annual income that is 124 times greater than the annual income of the poorest 20%. In New Jersey, the top 1% has 126 times the income of the poorest 20%. Post-tax, the Texas tax system worsens income inequality. Average income for the top 1% swells to 140 times that of the poorest 20%. While in New Jersey, the ratio drops from 126 to 124. In other words, Texas's tax policies are quite literally widening the income gap between rich and poor, while New Jersey closes it by a nominal amount. Unfortunately, Texas is not much of an outlier. It's among 45 states with upside-down tax systems, meaning the lower one's income, the higher one's effective tax rate. The Lone Star State has the second most regressive tax system in the country and is among the states that ITEP dubs the Terrible 10, meaning their tax codes have the worst effect on income inequality. The type of tax matters. Texas, along with 6 other states on the Terrible 10 list, does not levy a personal income tax at all. And further, Texas and 7 of the other Terrible 10 states rely heavily on sales and excise taxes to raise revenue. Unlike Texas, New Jersey ever so slightly mitigates income inequality in part because it has a graduated personal income tax, and it has instituted a fully refundable earned income tax credit, which reduces the amount of tax that low-income families pay. These policies shift tax responsibility to those who can afford to pay more. While poor families in Texas on average pay more than 4 times the tax rate of the top 1%, poor families in New Jersey pay less. New Jersey is doing better than Texas when it comes to ensuring those who have more pay more, along with the District of Columbia and 4 other states that buck the national trend by taxing the top 1% more than the poor. The Texas-New Jersey story reveals how our elected officials' tax policy choices truly can make a difference. It is possible to create more progressive tax policies that don't worsen income inequality and don't leave middle-class and low-income families behind.